tired today. I think I'm caught up on my sleep. Hey, good morning, Gab. Good to have you. Um, Good to have you. All right, what are we going to do today? Tearing it up. Guys, we're going to remind you that this is an educational breakfast pizza. Egg whites and Canadian bacon, Ron. Got to get my fat ass back in shape. The Pacific Northwest is cold, not as much movement. Guys, this is an educational room. It is for informational purposes. We will spend a lot of time looking at a live market, and if the rules are met per the plans that I give you guys every day, you'll even see some live trading. But none of it is intended to tell you when to enter. None of it is intended to tell you how to trade. Guys, I don't give advice. I don't call trades. What I do is I teach you guys to read your indicators. And it's been pretty much the same thing. We're going to learn rules. Guys, I put a zip file in the room that has the rules for the high probability trend trade, that has the trading plan to teach you how to read TradingView. You guys seem to be more interested in the live market than the same repetition every day, which is okay. It doesn't hurt my feelings at all. So if you need a review on the rules, guys, go to the live page on YouTube, and really anything before Monday of this week, you're going to have a whole hour of trading review. I'm going to drop all the stuff zip file in here again. And guys, in that zip file really is everything that you need. There's a PowerPoint, and the PowerPoint is the first hour that you'll see in the video. It is the rules, where to find the rules, why we do what we do, what the indicators are called, breaks down every rule individually, all the way down to entries, and then it does the same thing for TradingView. Go through it. If you have questions, raise your hand. It's got trade tracking sheets for you. Whoops, they're coming up on the wrong screen. There's one for NinjaTrader. There's one for TradingView, guys. There's a plan for TradingView designed to optimize your chances of success in there. There's a plan for NinjaTrader designed to optimize your chances of success. There's a reminder of what sort of pictures you can be taking each and every day. And then finally, the Trend Trade Simple, guys. Everything that you need to be successful. I've never held back, to be honest with you. I give you guys everything that I know how to give you to help you find success with the software. The only thing that Nexgen doesn't do is the work for you. So you got to learn those rules, guys. Got to learn them. Got to learn the language. Got to learn the looks. Got to learn the patterns, because the patterns are what we trade. Patterns repeat themselves. The market repeats themselves. Your rules describe a pattern that you can prove wins more than it loses. Now, I want you to think back to 1987 in your tight Jordache jeans with a giant comb in the back pocket, walking up to the Pac-Man machine. And you drop a quarter in, and 3 minutes later, your game is over. The ghost gets you. And you drop another quarter in, and 5 minutes later, the game is over. And then here comes Johnny Cool Pants. He drops a quarter in, and he plays on that machine for like 2 hours straight. And he does it because he learned a pattern that's bringing him success, a pattern that's repeatable, a pattern that is proven, testable, and able to let him know he has the advantage in that game. Guys, that's day trading. You've got to learn your patterns. Simulate, practice, post in my room. The people that post the most get to where they want to be the fastest. My only request, I won't say demand because I'm not that crotchety yet. Guys, you have to tell me what you see. You have to tell me why you did what you did, because when you define the whys, you make it repeatable. When you define the whys, you make it testable. When you define the whys, you are literally creating this correlation between what your eyeballs see and what it says to your brain, how those advantages come off the page. So whether it is NinjaTrader or whether it is TradingView, guys, that's my one request. When you post in my room, Let me know why you did what you did. I'll give you everything in my arsenal. We'll have a private session right here in front of everybody. We'll talk about the good, the bad, the advantages, the disadvantages. I won't tell you, hey, way to be awesome. You're a wonderful human being. And I won't say, hey, I can't believe you broke that rule. I'm so disappointed. What we're going to do is we're going to say, this is what was good. This is where the challenges lie. I want to make sure that you see them. Here's how to fix it. And then just keep it simple, guys. The plans that I give you in this room are 3 rules. That's it. There is 3 rules for the high probability trend trade in NinjaTrader. Guys, there is 3 rules for the trend trade in TradingView. Stop making it so damn difficult. We're going to give you analysis, rules, coaching. You're going to be responsible for becoming the profitable trader, guys. You're going to be responsible for learning your rules, and you're going to be responsible for simulating your trades and practicing and posting them in the room, and you're going to be responsible for keeping it simple, guys. Learn the looks, because the looks are the pattern, and once you know the pattern, the market slows down and life gets easy. So with all of that said, let's check news. Every morning I go to forexfactory.com. Did you say you learned to wait? You lied. That's all right, Paul. It gets easier over time. Today is Wednesday, November 19th, and there's not a whole lot going on in news. A lot of low impact, At 12:15, President Trump speaks, guys. They're calling it medium impact. Never know what he's going to say. You never know how people are going to react. And then at 2 p.m., they are going to release the FOMC meeting minutes. It's not the same as the FOMC day. They're just going to talk about it. The market may bounce for a couple minutes, and then typically it returns back to normal. But knowing that that's going to happen at 2 o'clock, what it does is it gets it in your brain, hey, my patterns may get disrupted because of high impact news, and then you'll have to make the decision on whether or not you'd like to trade. Most funding companies will tell you to avoid it. I know Nexgen Pro Trader Funding does, to not trade a minute before or a minute after. And then we're just going to get into it. We will talk about TradingView, and we will also talk about NinjaTrader. And guys, I'm not gonna try to be smart. What I'm gonna do is I'm gonna try and help you learn to read these indicators, because 90% of your day is reading indicators. 90% of your day is sitting on your hands. 90% of your day is not actively trading. You know what? I'm even gonna open up mine that I posted in the room, because they sure do fit the rules. Opening them up with you guys here. And we're going to go ahead and we're going to start off with your chart reads, with your trades, with your observations, with your entries, with your exits. And we're going to not say, hey, good job, bad job. I'm not the trade police. I encourage you guys to not be the trade police. We're just going to talk about the trades. We're going to talk about the patterns. We're going to talk about the rules. And then, guys, we're just going to read the live market. We're going to, whenever you guys aren't posting questions, we're going to do chart reads. And whenever you guys aren't posting pictures, we're going to do chart reads. If you have a question, if you have a concern, if you have a need, all you have to do is raise your hand. You don't even have to raise your hand. You can go right to the chat box and say, hey, Mark, what about XYZ, right? What about those trigger lines? What makes them strong? How do I define a termination condition? I read it, I watched the video, but I'm a little unclear. Can I get some clarity? Guys, the answer is always yes. This classroom is designed to be a discussion rather than a lecture. My throat gets tired when I lecture too much, so save me from myself by asking a lot of questions. We're going to start it off, and then Paul says, why can't get in here stay in as long as odds favorable momentum of 1 minute holds? Ride it through the problem areas. Is this what you, coach, have talked about, Victor, and picked up on? No, it's not. So you ready, Paul? We're going to talk about it. And Victor is talking about something completely different than I talk about when we talk about the pattern. So the pattern that you're looking at, that you're saying, hey, there's that white bar, right? It starts with a termination condition on the large chart, Paul. And what you're looking at 837 are triggers that are up, strong side of the triggers, and room above. Does that make sense? Everything about your large chart says up. Do you see it? This would be an aggressive counter trend trade. This would be you saying, man, I sure hope the market decides to go down. That's it. That's all it is. Your smalls are still up, your large are still up, you're above a zone, you're into one-to-ones. And what it did is it went down. And there wasn't any indication on either chart that that was the most likely outcome. But it can happen, right? It can happen. How do you enter? I don't know. How do you fight everything? How do you break your rules? So what it really is it is the market going down and really not giving you an entry either direction. Does that make sense? But because you see 10 bars down, your brain is going to say, well, how do I get that money? The market clearly went down. How do I get the money? The market clearly went up. How do I get the money? And man, that's such a real thing. But here's the reality. There's an easy way, right? Being on the right side of momentum, which it wasn't. Having nothing in the way, which it didn't. And being able to define an entry. A definable, repeatable, provable entry, rather than relying on your guts and hindsight being 50-50. Or what is it, 20-20? Something like that. Hindsight is something. Because what happens, guys, and you all do this, and I'm guilty of it too. I'm going to show you exactly what happens. Nothing at all on your large chart says go short here. Nothing. It's indeterminations. The large triggers are still up. There's no reason on God's green earth to find a short. But when you see the market do this, you want to know, how do I get in? How do I capture it? How do I make that my money? And guys, the reality is that if you can't define your advantages, if you can't define your entry, sometimes it's just not your money. Does that make sense? It's tough. It's a pain in the ass because you have to watch the market go without you. But the reality is, guys, there's sometimes where you just don't have rules. And Paul, I couldn't even make one up on this. But because it went down, you have to question it. And guys, this is what I want you to do. When you see something like this, go, Mark, did I miss something? Was there something that happened that I didn't see? And Paul, sometimes the answer will be no. And that's just what it is on that one. Great posts, though. Guys, those are the posts that get conversations going. Those are the posts that take us all next level, because we don't just accept the one trade that teaches us to read our indicators. We start looking for the opportunities based on our chart reads. So I'm gonna beat the horse just a little bit harder. So Paul, if you went through your chart read instantly, if you said it was up, whoops, drunk fingers. If you said it was strong, and if you said it was clear, is there really anything in your guts in the moment that says look for a short? Not really, right? No. And that is the perils of looking at what the market did rather than paying attention to what the market is doing. Good stuff. What a great lesson to start the day. I like that. All right. Break even has its drawbacks. Slippage, and with more experience, deeper stop and collect olive. So let's see what you did. 15-minute down. Okay, strong side. Now, clear path. You're in at 07. If I had run through the large chart instead of the small chart. Exactly. So you're in at '07 on this trade, Paul, and I just want to make sure that I'm reading it right. Maybe I'm not reading it right. 98. Oh, you're in at 98. Okay, which means that we are down. We are on the strong side. There is definitely room. Um, Help me with your entry here. No, that's okay. So what made you decide to go short directly into trouble? 100%. Absolutely snowball's chance in hell of that breaking in the moment. And you're not just going into a zone, you're going into an HVA. The one-to-ones haven't broken. You bought or you sold directly into a brick wall. Do you see it? Just 100% clear violation of rule number 2. And then what happens? It bounces. I mean, my goodness. It goes from your entry at 98 all the way up to 18. So you've got this $200 of risk directly into trouble, and you're hoping. And your hope, well, it starts to go down. I like it. And then it comes up, and then it starts to go down. And there is your true entry right here. Pull back, close below, room to targets. Do you see it? And from this entry, it's easy street, straight to trouble, right? This is the I can't wait. Oh my gosh, I'm going to have a heart attack. What's going to happen? There's your rules-based entry. Now you're in at 94.75. It's not even 4 points difference. And now you have the confidence to hold it to the area, because by the time you get here, you're exhausted. You're saying, oh my gosh, I threw up twice. I yelled at the dog. My hair fell out. And then the easy one just goes, right? Right to trouble. And life is easy. And guys, your large chart read was 100%. Your small chart read needed to get away from that trouble. It needed to break through that zone rather than trading right into it. Does that make sense, Paul? Yelled no dog, but did not throw up too much stress. Yeah. So guys, when you talk about ooh, something just bit my toe. When you talk about trend trades, there's this awesome phrase that comes out of the entries, and it makes it very, very consistent. First, on the large chart, so we're going to do two things here. On your large chart, guys, on your 15-minute chart, you're going to define direction with the small triggers. So we're going to get into the little lessons here. If the small triggers are up, looking for longs. If the small triggers are down, we're looking for shorts. You're also going to define the momentum. And guys, I believe, and I was thinking about this last night, and I was talking to my wife who had no idea what I was saying. This where is price versus the triggers, this is a management tool. This is letting you know how to manage the trade. If you went from direction to room to targets, you could still find a pretty good level of success. Knowing where price is in relationship to the triggers is a great way to help you manage the trade. But the rules say first there's room on the large chart, and then the rules say that you have room on the small chart. And once both of those are in play, it's a pullback to an area and a close on the correct side of the triggers. And these are the easiest trades you'll ever take. And now the challenge is that you got to wait. Sometimes you got to wait for that clear path. You got to wait for there not to be a zone or one-to-ones or something in the way. But with the perfect large chart read, and you had it. It was down, it was strong, it had room, and look, it did go to trouble. The part that you skipped was the pullback, the close below, and the clear path to Profitville. And guys, your trend trades should look the same every time. Your trend trade should feel the same every time. Your trend trades, when you annotate your charts, you should be able to say the same thing every time. because you're following a very specific plan that's been proven to win more than it loses. So the 15's up, strong side, clear path. I love this one. There's your pullback to the area. Not quite a close above. And it goes straight to trouble. It's perfect. So much easier, isn't it, Paul? So much easier. From 32 to 42, $400 trade. Exit both contracts separated but did not change number between buy-sell buttons. Dang it, dang it, dang it. So you went from 32 to 37. So out early. Why so early? From the strong side, why so early? Just didn't want to lose, huh? And that's okay. Guys, if you're brand new and you're learning it, well, did not change number between buy sell buttons. Oh, okay. So you were going to take half and then the other half. I got you. I got you. So you wanted to take one contract off at 100. I got you. And then run the other one. There's the dang it. That makes sense. I'm sorry. I'm a little slow some days. Little slow some days. All right, let's see what Ron did. Mid-band, not a full bar from the large, so not an issue. Perfect large chart read. Momentum is defined by a separation between the small and large triggers. So Ron is working with all the momentum, nothing in the way. He lets price get above something that could create a bounce and rides it up to trouble, guys. And this is a base hit times 4, which means that he made $110 on 4 contracts. At 4:39 in the morning, he's already up over $400 and going back to bed. Old people take a lot of naps, I'm told. I'm not sure, but I guess that's what he's doing there. Great trade, Ron. Great trade. All right. This was mine this morning. I woke up and I said, I'm going to take the perfect trend trades for my classroom because I want to go through chart annotation. And guys, there's got to be, this is what I see, and this is what it means to me. When you're reading a large chart on TradingView, your small triggers can define the direction of the market. You don't need large triggers. You don't need background colors. All you need are these small triggers pointing up, and your brain should instantly say, because they're up, I'm only looking for long trades. That's the first step. The second step is, where is the most current price in relationship to these triggers, guys? And there's 3 options. Let's take a picture because pictures are fun. You can be to this side of the triggers, on the left side of the triggers, and that's what we call the strong side. And the strong side means that everything is more likely to go up. Bigger moves, 1-minute areas are more likely to break. Let's just do it this way so I can show you the picture. So remember, this is helping you with management. You could be in the transition, which is inside of the triggers. That means, hey, be aware of 1-minute areas. Get ready to manage. Things could go south for you. Or you could be on the weak side of the triggers. And weak side says, hey, the 1-minute areas are most likely to bounce. Get paid. So when I took this trade, this was my chart read. I said, whoops. I said, the small triggers are up. I choose to go up with them. Price is below the small triggers. I recognize that as the weak side. That tells me get paid at areas. And I have room. I've got room before that big chart ever hits anything. Are you guys with me on the chart read? First it's up, then it's weak. I've got room to get paid. Then and only then, with room to get paid, is rule number 1 met for the trend trade. So now I go to my small chart. Because my small triggers roll against me, I have to wait for that pullback to the area and then a close above the small triggers. That's your trend trade entry. And because it was weak, I chose to get paid right at the area, right at 1150. It slipped me a little bit. It went up so fast it took me out. So that was a little over 8 points. It was instant. And that was the entire trade. And then there's my exit. The exact same trade came back. It comes back to the area again. It closes above the small triggers again. And because I had to use the pivot low for a stop, it keeps me in. And it goes to my target right at trouble because of the weak side. It's the exact same annotations for two different trades with the exact same result. Guys, get in the habit of going through this process every time. It'll make life easier. My close above doesn't have to clear the zone. There's my close above right there. Trina, we pulled back to the zone, right? So there's two ways, and I know exactly what you're saying. So check it out. You ready? The market broke away, and then it pulled back, and then it closed above. So you're asking, Mark, doesn't the bar have to clear the zone? So Trina, the lesson that you're going after here, and I know exactly what it is you are saying, let me find a good example for you real quick. And this is a great example. Do you see how the bar closes above here? And you're thinking, well, if I'm going to go long, doesn't the bar have to clear and pull back, right? But let's flip the picture, Trina. The triggers are down, right? I don't know. Maybe we're on the transition side. I've got room to targets. The trend trade rules say pull back to an area, close on the correct side. So on the trade that I took, this was my break away from the area. It went all the way up, got paid, and then it pulled back to the area a second time, and then it closed above, and that initiates the trade. So this area has already broken. Resistance has already become support. Does that make sense? And what a lot of people are messing up, Trina, is they're saying, well, I want to go short. And they're saying, or here's a good example right here. I want to go long, but it never breaks. Like you never get that separation between the areas. Let me pull up a picture real quick. So for a trend trade, bum, 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 it pulls back to the area. For a momentum trade, which is what the majority of you guys are absolutely butchering, love you to death, it has to break away and then pull back with momentum. Does that make sense? Was that the question that you had? On a trend trade, you're already so darn far away. Like I was up here at 14. It pulled all the way back to 02. I got a 10-point descent to my area. And the cool thing is, Trina, is this area used to be resistance. And then it broke. And now it's behaving as the support for my trend trade. Does that make sense? Perfect. Good stuff. Great question. And here's a great example of it too. Pete says, check it out. Strong trending market and absolutely nothing in the way. And Pete, it was funny. I opened up my crude oil right about when this was happening. And Pete says, this is what we're going to do. When price breaks below support, I'm going to sell it as it comes back because support that's broken becomes resistance. And you can't see it, Trina, because he's got an arrow over it, but his price gets below. And then it just snaps right back to it. The challenge is, and we'll probably see one before the day is over, is not letting it separate, not letting it create that space, not letting it turn support into resistance. But once it did, he's like, giddy up. Let's go make some money. And I promise you, you will see an example of that peak over, and I'll make a point to say it really, really loud. All right. Well, exactly. So, and I think that's so good. So Trina says, I have to start thinking support and resistance, not just a zone, right? So that's great. So Pete's going short. Pete wants resistance to hold, and support becomes resistance. And if he was going long, well, there's a good example right there as well. Everything breaks below, and do you see how it pulls back? Pretty cool, right? That's the key to everything. Breaks below, pulls right back. And it's that separation and return that creates the advantage. Good stuff. I like that we're getting going like this. All right. Is this Wayne? This is Wayne. The triggers are up. Strong side of the triggers. He's looking for the divergence high. Missed the perfect entry. Right? So Trina, there's another example. Pulls back to the area and then closes above. Beautiful. And then he says, I'm not awake yet. And then when everything rolls back up, he's in and out at trouble. And I like this. This bar closed above the HVA. Wayne, are you in here? Is he out running hot yoga? Okay. When the HVA of this bar is above the pink HVA line, this is your HVA breakout look. So I don't know if he recognized that. And then that down bar is the breakout entry. So he did it perfectly. I'm going to give this to you, Trina. I am recording. I'm going to drop that picture in there as well. So what he did is he caught the second half of it. He had odds favorable momentum. And he says, I'm just going to get in above trouble and see if they finish the move. The trend trade was down here. He's catching the second leg of it. He's jumping in mid-trend trade from the strong side with momentum on both charts and room to trouble. It's beautiful. It's just a jump-in trade, but it originated as a trend trade. Nicely done, Wayne, if you're listening. And then, Trina, there's that lesson. I love this. The triggers are down. He's on the strong side of triggers and room for days. And look what he does. It gets to the zone. There's the peek through that everybody loves. Oh, look, it closed below the zone. It must be a trade. Guys, it's not broken. There's your solid break. There's your bar that starts and finishes below. Trina, support becomes resistance. There's this pullback to the zone, and he catches it going away from the zone. That is perfection, guys. You guys that keep wondering why this trade doesn't work, it's because you're not letting it break. You're not giving it the chance to become resistance. It's still support. It's still support. It's still support. It's still support. Boom. Now it's resistance. And I'll be darned, holds like a champ. And down it goes. Does that make sense, everybody? I love this lesson, guys, because one of the biggest challenges new users have is believing that a tick or two away from a zone is home free, and it's just not. It's just not. It is, I'm hoping it breaks. That's all it is. This is, I see it broke. And yeah, you have. I've noticed that, Trina. The difference between a trend trade and a momentum trade. Absolutely. That's okay. We're going to keep saying the same darn thing until it sticks for both of us. Strong top. It's 3 divergences, strong top, all the momentum, potential to break. Oh my gosh. Pete takes the momentum look, And it tries, but it fails. And I love this. The large chart is absolutely gangbusters down from a strong top, room to trouble, and the potential to break the fibs. Is there anyone that doesn't understand that read? First, it's momentum, separation between the small and large. It's 3 triggers through Fibonacci, which means that the breakout potential is high. Pete takes what is a momentum style trade. Support becomes resistance. He sells that resistance. Pete knows, because of this look, that if this momentum trade fails, and it does, a trend trade is the most likely outcome. So he takes his trend trade entry. But he also knows that divergence kind of pulls the wind out of the sails when it's only the potential. So you'll see that he manages very assertively and he doesn't give anything back when it starts to change. So this is a medium probability scenario with very assertive management. But this entry and the hold and the add-on is an understanding of the rules. If a momentum trade fails and the large chart is really supporting it, very often it turns into a trend trade if the rules are met. Nicely done, Pete. And then Z Robot, are you in here? Sometimes you guys disappear. I want to make sure that you are. Cool. Is this a chili dog? It qualifies. Why? Because your large chart is screaming up with nothing in the way. It's not the best momentum, but everything is up, nothing in the way. You allow it to break away from resistance. Here's that idea again. Got to get through the thing that could create a bounce, and you jump in, and you said that you got out at trouble, target at trouble. I'm curious what trouble you saw, because I think we've got a great lesson on divergence, right? Because there was nothing in the way. It was clear skies everywhere. That divergence doesn't print until all the way down here. So maybe it was just a number. No, that would have never even turned red. Where you got out, that is still a green bar going full rock star north. It's okay if you just said that's enough, I'm out, because these trades are just based on momentum. And if you look at what Ron C does, 110 bucks is like on crude oil, 112 on the S&P. One of the challenges you're going to run into trying to do this on the NASDAQ, Z-Robot, is that it's damn near untradeable, because in most instances, the NASDAQ fluctuates too much to support this trade. I know. I spent 30 days trying to make it work on the NASDAQ. And you'll get lucky just enough to feel like it's a good idea. That's from my own personal study. You do whatever makes you happy. But in my world, that's a tough one. It's a tough trade to execute and define success on the NASDAQ. Guys, strong triggers, 3 triggers through, pull back to the area inside of triggers. There's your pattern once again. All right, Miss Trina, you ready? I'm putting you in the hot seat. We got 3 of them. NASDAQ is a slot machine. I will disagree, Ron. I think if you have the right plan. Someone sent me a message yesterday and said, oh my gosh, the NASDAQ is crazy. Guys, if you don't know your rules inside and out, if you haven't studied the nuances of the NASDAQ, it will chew you up and spit you out on Renko bars. On TradingView, the NASDAQ is a pussycat. It's a minute bar is a minute bar. So your bars don't just spike and run the way they do on Renko. But the other side of that is that bar was from 31 to 71. That's an $800 bar. And when you have an $800 bar, you have enormous risk. So that's the other side of the NASDAQ, is sometimes you may have to put a little more on that trade to make it work for you. Every grandmother in Vegas has the perfect plan too. Yeah. I've got a buddy, Ron, and everybody in the room. This is the difference between gambling and trading with a plan. Gambling, you are hoping stuff works out. That's it. Trading with a plan, you're repeating a pattern that you can prove wins more than it loses. There's a huge difference between gambling and trading, but there's the misconception that trading is nothing more than gambling. The way 90% of the people do it, it's absolutely gambling. But if you can say this pattern, right? And let's just exhibit A. I can say without question, this pattern, when I have momentum, when I have the potential to break, when I have a pullback to an area inside of triggers, I could go take 100 pictures that look exactly like this, and I could win 70 to 80%, which means I have an edge. I have an advantage, and I have a checklist to define the advantage and the edge that it provides, guys. If you can stick to a plan, if you can follow rules, if you can do the same thing every time, you can create an edge. You can trade probabilities, not hope. Gambling with loaded dice. Amen. All right, Miss Trina. So it's up, and it is transition, and it is room to trouble. And you just don't have a zone for entry, do you? You just don't have a zone for entry. So one of the most important phrases on entry is pull back to an area. Pull back to an area, right? And we saw this one yesterday as well. So you never got your area, Trina. There's just nothing there. Even though it closed above, it's directly into a mid-band. The bar didn't even close above. Yeah, your mid-band held and pushed it back down. And then you're able to get out for 3 ticks, which is outstanding. But this is one of those times, and I love this. You said, oops, I made a mistake. I'm a GTFO. I'm going to take my 30 bucks and I'm going to wait for the right trade. So great lesson here again. I love it. HVAs aren't areas for trades. And just because you get a little line above it doesn't mean that an area is broken. Good stuff, Miss Trina. Now, if you were pulling back to the mid-band, it would be a different story. But because you're trading into it, you're trading into trouble. Good stuff. All right, flat down, but in my head I see down. All right, from the termination, they're starting to roll. You're on the strong side. There's your pullback. There's your close below. There's your money. Trina, it's the perfect trend trade. Nicely done. And that looks like it went pretty quick. You're in at 68.4. You're out at 66.9 in a minute. Pretty stress-free too, isn't it? And look at your patience. There's your pullback. Love it. There's your close below. Everything. Rock star perfect. And the results speak for themselves. Nicely done. Now, how did this one feel compared to this one? One of the things, and you don't have to answer it out loud in the room, I ask you guys, how do you feel in a trade? Do you feel nervous? Do you feel confident? Do you feel jittery and uneasy? Are you moving your stops and targets a lot? Do you just kick back and say, those scratchers are going to have to come get me? Everything is perfect. And guys, your emotional state in a trade will have a lot to do with how well you're following rules. Should be a stop sign for stress. Yep. So let's see what happens. It's down. It's strong. There's your pullback to the zone. There's your close below. Beautiful. So see this pink line, Trina? Hey, good morning, OG. That's your pivot high coming into this trade. That's your stop placement. Does that make sense? So when you're entering a trend trade, guys, you're using the pivot high. And it does dance, doesn't it? But it never takes it out. And then it starts down. And you closed out when you got back to positive money. What changed for, like, what changed, right? These were still down. You were still strong, right? The area did hold. The small triggers turned down, and you jumped out. And that's okay. I don't know what it did after. You saw the outer band at 40, so you got out at 51. 51.25 is right here. You made a tick. You made one tick. You sat through all of the hard stuff for one tick. So what's the expectation? Let's do that, right? Let's do that. If this is down and this is strong and there's nothing but room, can we say, I know, stress, can we say that the expectation from the strong side of triggers with absolutely nothing in the way, a realistic expectation is somewhere around 24,500 based on the large chart? Yes. Your first bump in the road was right there. That was your first bump in the road from the strong side of triggers. Guys, this is where management, having a plan, right? Having a plan, creating expectations, understanding the potential outcomes based on what the indicators say. So you want to see if we can find it? That's AM. It was somewhere over here, right? What was the timestamp on that one? 1605, 1610, so 410. I'm just going to put a big box. Yeah, so let's see. Just for grins, I do this, Trina. I don't know if you ever do this. Guys, I think one of the things that's important when you're done with a trade, go back and look at what the trade did when it was done. And what it does for you is it really starts to set you up for some management lessons. So your trade was somewhere in here, Trina, and it did everything it was supposed to do, right? It did everything the expectations were. And I think that it's important to go back and do that. Well, that was the NASDAQ. That isn't even the right market. Trina, you let me look like a fool here. Just kidding. I don't need your help for that. So let's go to the NASDAQ and look. It did. Oh, you know what, Trina? Hold on. If I'm not mistaken, I might have taken the exact same trade. I do so much, sometimes it's hard to figure it out. Let me see. I talked to my brother all day long, and I know that I sent him that trade. Trina, I think we took the same trade. Is that it? you might have taken the one over here that did make to the outer band. I took the exact same trade. Well, I took the next one. So that's kind of cool. You can go back and see it did in fact go, right? Some people get nervous when they do the same thing as me, but I think that there's a great lesson there. Go back and look. And the reason I say that, and guys, don't worry, we got hours for the live market. Don't panic. The reason I say that is Trina, this is an awesome, it's a great entry, and it's tough management. But do you think, dun, 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 if you saw after the fact that it did in fact make it to 540 from 51, and you saw that $440 trade, would you be more inclined to begin to trust the large chart? And what you're doing is you're working through management right now, Trina. You're trying to replace emotion with a plan. And I say that because from the strong side of the triggers, that's your big moves. That's the one. And 90% of the people in this room, I keep going back to 90%, guys. It's a made up number that sounds impressive, just so you know. But most of the people that I work with know exactly why they will get into a trade. They study the rules and they say clever things like, I'll take a pullback to an area inside of triggers because that's what my plan says. And then once they get in, man, this is going to be recorded. They absolutely shit themselves because they have this emotion, this, oh no, what if it turns against me? Oh no, what if I lose? Oh no, oh no, oh no. And they don't build a management plan. They don't give themselves a reason for exit. And guys, if you leave it to your guts are going to mess with you every time. I firmly believe that. And I know because I've done it. Because I've done it. Yeah, and the longer you're in a trade, even the right trade, you start to question. You start to ask. You start to go, oh my gosh, is it really it? Man. Stopped out of the tick. Closed this bar was it. Exactly. And guys, here's the other thing. So Paul, trading into areas again doesn't serve you well. You have a thing. Did you guys know that everybody has a thing? Everybody has something that holds them back. Sometimes that thing is fear. Sometimes that thing is trading directly into areas. Sometimes that thing is jumping out of a trade way too soon because your emotions get in the way. Everybody has a thing, guys. I was trading into areas thing. That was my first thing. And then when I finally overcame that, I had been beaten so many times doing it that I couldn't hold a trade. I would take the perfect entry and I'd be out for a tick or two because I was so scared of losing. My brain didn't equate the rules breaking with loss. My brain just saw loss. So, Paul, your thing is trading directly into areas hoping they break, especially from the weak side, right? I'm on the weak side of the triggers, which is where 1 minute areas are most likely to hold. So I love the lessons that we have going on today, guys. I think this is going to be one of those days that changes the dynamic of your trading for the better. That's what I think. All right. Paul, are you with me in here? We're going to do some smart stuff. We're going to do some smart stuff real quick. Did he take a coffee break? All right, so you guys get Paul's lesson. If every time I read my 1 minute or my 15-minute chart and I said to myself, whoops, hold on. I said to myself, hey, self, where do I need to put that? There we go. Let's put it right here. My 15-minute triggers are down. I can define direction. Is everybody comfortable with the small triggers defining direction? They're either up or down, right? You've only got two choices. So he says, hey, they're down. And I agree 100%. That's as down as you can get. And then he says, weak side. And guys, here's the thing. If you said in your biggest, boldest dog voice, I'm on the weak side, 1 minute areas are going to eat my lunch. 1 minute areas are most likely to screw up everything that I hold dear in a short trade. Do you think eventually you're going to stop trading into 1 minute areas? I hope. That's kind of my hope, right? Is that you are so vocal about what's going on your large chart that it becomes more difficult to break rules on the small chart. And if you say, I'm on the weak side, and don't stop there, right? This is phoning it in. It's down, it's weak, it's clear to the mid band. What does this mean to you? And guys, once you define what weak side means to you, you're less inclined to trade into areas. You're going to develop that patience. But what Paul did here was brilliant. Paul says, all right, well, it did pull back and it did close below. And Paul, that area is still not broken, but at least now you have a fighting chance. Now your small triggers are down. Now the area has held and you're getting pushed below it. It's still not broken. The area is still not broken. It breaks here where the whole bar comes away. And you can see that they come back and test it as resistance. But not trading directly into areas, guys, is going to pay huge dividends. And Paul, I hope you got the lesson on that one. It's a great one. Does that make sense, everybody? You're the Sybil. You have multiple things. We all do. Strong triggers. I love it. It's coming from a strong bottom. Beautiful. I've got one area inside of triggers with the potential to break. If they come back and hit this area, it's a momentum style trade. It's a couple ticks on it, but it follows the plan. It would be a pullback right to an area. Stop would have to go where the market shouldn't go. Because of the momentum, my hope is that this area breaks. First target's at $100. If I get that target, I'll go break even. If I get a reversal bar, I would say if I get a reversal bar, I'll hide behind it, but there's your first target. KISS plan says go break even. Second target's at $200, which makes it a $300 trade. Guys, this is the 50-50 trade. This is the second trade on your plan. So far, we've banked $100. Triggers are up, everything's up. No reason to exit. Everything about it says giddy up. Here we go. Hit that target. You're damn right. $300. This is what we talk about every day. First it's momentum. Then it's the potential to break. Pull back to the area inside of triggers. And for the love of fuzzy, let it work. Nicely done. Anybody catch that one? Did you guys see how quick the read happened? How fast I was able to say, hey, it's momentum? Instantly, I could say 3 triggers are through. That's my best look for the breaking. There's my entry. It fits the rules 100%. I was paid before I ever got a reversal bar, guys. Great entries create manageable trades. And then it was just let it do what it does. And now we're directly into resistance. None of my triggers are broken. I refuse to look for an entry because my path isn't clear. Pretty cool, right? Guys, if you wondered what I teach in this room, that was it right there. That was it 100%. Hold on. Let's do it. I didn't annotate. So I'm going to do this. These are the rules for that trade. All right, let's go to the market real quick. Come on. Got you in 1 second here, Pete. My goodness. Dun, dun, dun. So here's my rules. 3 of 4 trigger lines through the area. It's a yes. Odds favorable momentum, strong triggers. It's a yes. Smalls outside of the large on the small. It's a yes. And we were in before divergence ever printed. So that would have been the one break. But our entry came before that ever printed. Enter at the area. Guys, that's the trade. That's the checklist. That's the look. That's what I give out every day. Now, I can hand you these rules every day. I can tell you that if you follow this plan, you're more likely to find success than you are failure. If you know exactly what gets you into the market, you never have to wonder if it's the right trade. You only have to make sure that the rules are met. And it even talks about how to manage it. And guys, this is what Nexgen is. Nexgen is providing you the highest quality indicators in the business. It is giving you the feedback and the coaching so that you can learn how to read them, so you can learn how to make great decisions in the moment. Now, there was no reason to exit that trade that at 300, but my plan says get out at 300, wait for the next trade, it's coming. And guys, they are crushing this market to the upside right now. So let's see how Pete did compared to me. Triggers up, 3 triggers through, pull back to the area inside of triggers. This isn't the same one, but that's a trend trade. And sure enough, half off at 10 ticks, trailing stop. That's not the same trade, Pete, is it? Looks very different. Oh, it's coming. I was like, whew, thought I was missing something. It's perfect, though. Continued up a little after a little blip. He got all of his triggers above the area, and he said, let's go. Beautiful trade, Pete. Nicely done. So, guys, every day in this room, we talk about recognizing what's good, what's in favor, what's supporting the trade. It all begins with momentum. I can't stress that enough. So if you are on NinjaTrader, your momentum look, your best of the best look, is the same look every day. In an uptrend when the background is green, it's that look right there. It's that separation between the small and large, and it's consistent. I don't care what chart you're looking at. If you have that look, you have the advantage of momentum. And if you have this look in a downtrend, you have the advantage of momentum. Do we have some new faces in here on NinjaTrader? Let me know that you're there, guys. I don't mind slowing down. Momentum looks like scissors. They're open. They're ready to cut. They're getting things done. Life is good. And guys, when your scissors close, when those smalls work their way inside of the large, your advantage is gone. Momentum is no longer present. You can no longer say to yourself, rule number 1 is met. And then your path has to be clear. For the highest probability trend trade ever, your path has to be clear. And your path being clear is nothing more than the relationship of trigger lines to the area that's in your way. So if you reach an area and none of your triggers break above it, guys, it's a termination condition. Absolutely no trades according to the very simple KISS plan that gives you the highest chance of success. Sit on your hands and wait for the reaction. It could break, it could bounce, it could reverse completely. And the reality is, I don't know. I never know what the market's going to do. That's just a fact. That's something that you have to come to terms with. If 2 triggers break above and I have that momentum look, it could break. The potential's there. But if I had to pick a word to describe the potential of that break, that word would be meh. It's not that great. I don't want to put my hard-earned money on this one as a brand new user. I want to optimize my chances of success. So the plan says let 3 of the 4 trigger lines get above that area of resistance, because with momentum, now that area's got a higher chance of breaking. Now that area is more likely to succumb to momentum. It's still yellow though because it's not a clear path. But when 4 trigger lines break above that area of support or that area of resistance, Trina, say it with me, resistance behaves as support. The path is clear. There's nothing in the way. Life is good. It's time to kick ass and take names, guys. That's your best look. And the easiest trades, if you're on NinjaTrader, that you will ever take will have the advantage of momentum, absolutely nothing in the way, and then you're just going to sell that pullback at an area inside of triggers, or you're just going to buy that pullback at an area inside of triggers. Is it the only trade? Of course not, guys. There's a million ways to make money with this software. That's the easiest way. That's the highest probability way. That's the one, for the love of everything beautiful, that is predictable. And Pete had to show off a little bit. Way to go, Pete. I get out at 300 and Pete's like, sissy. Pete's got some reps. Pete said with momentum, with 3 triggers through, with a pullback to the area inside of triggers, that's my best trade. And then we talked about expectations. The expectation with this look and that entry is that red fib. Pete, you did it perfect. Estefania, there isn't one, unfortunately. There is not one. John, something went wrong with the recording, and it didn't work out. But here, Estefania, because we are BFFs forever. There's the pictures from his classroom that sum up the whole day. And it's all management, guys. He's talking about management. He's talking about the things that can pull you out, keep you from entering. So I think everybody should steal those pictures. They're pretty outstanding. Pete, you were in at 78.25. This is where competitive Mark shows up. You ready? You were in at 78.25. I was in at 78.25. How come Pete and I knew to take the same entry? How did Pete and I call the exact same price with the exact same situation? Because Pete studied the plan. He knows the plan. He knows the rules. He knows what strong triggers look like. He knows what a termination looks like. He knows what an area inside a trigger. I followed the plan. I followed the plan. I took a $100 profit and $200 second profit. But you're right, I bailed early. And guys, if it were my account, wild horses couldn't have drugged me out at that. I would have been up here at this fib for an extra, what, 150 bucks a contract. I know, but the KISS plan teaches people how to get paid. Did you guys know that? That the whole idea behind the management and the KISS plan isn't to make you rich, guys. The KISS plan is not your get-rich trades. The KISS plan is getting you focused on getting paid. Show of hands. Who has been up $400, $500, $600 in a trade only to lose it or break even? My hand's up. Have you ever done that? Have you ever been up $1,000 and walked away with 100? Have you ever been up $500 and walked away with nothing? Guys, I'm going to tell you right now, that is some ridiculous stuff. What's the goal of trading? It's a two-letter phrase, guys. What's the goal of trading? We're here to get paid. We're here to get paid. Making money qualifies too. So the goal, guys, Here comes my Moneyball reference. Your account doesn't know how the $1,000 gets there. Your account doesn't know how the $200 gets there. All it knows is that it's there. It takes $400 a day. That's it. $400 a day in markets that trade billions to find your six figures. Greed is a killer. Greed ruins great entries. I don't know, Pete. I know how to find out though. Hold on. Pete's asking if the S&P is ever going to stop. There's really only one way to get that information. Will the ES stop? It is decidedly so. At some point it will. Just don't know when yet. So guys, when we talk about making money, and then Ron, it's timely that you jumped in here. Base hits pay bills. New users hate to get paid. New users hate to exit a position. Guys, there are two monsters that will damage your trading, and they're both named the what if monster. And I'm going to show you what I mean. I'm going to put a circle on it. This is the perfect trade, guys. This is the ideal situation that is in there that is designed to optimize your chances of success. It's one pattern. It's momentum. It's the potential to break. It's a pullback to an area inside of triggers, guys. It's the same pattern every time. So things that happen, and I'm going to go through this because this is a very real part of trading, and we're going to play a little psychology lesson right now. Because I think it's important. The first thing that happens is, what if this trade fails? So what do? You hesitate. You don't enter. You're scared, right? But the reality is you never know if a trade will fail. You never know if a trade will win. The only thing that you can do is say, with this pattern, I win typically 65 to 70% of my trades, so I'm willing to take the shot. If you don't have trust, you hesitate. Now here comes the big deal, and I love this one. The what if monster, guys. You take the perfect trade, the perfect entry. You even take the first profits, and you say, but what if it doesn't go? And you move your stop right here, maybe even before you get profits, and you get stopped out, and it goes, and you miss out on all the money. Has anyone ever done that? Guys, I was the king of the 2-tick trade. I'm up 5 ticks. I'm going to protect myself at 2 ticks. It's going to hit me, and then it's going to do everything that it should have done. I've done it a million times. I'm not proud of it. It's a fear. I don't trust the plan. The other what if monster is you get to that red line that could stop a market, and it says, hey, but what if it breaks? What if that area with the potential to stop the market doesn't? What if all the triggers below it really doesn't mean that it could, and you hold it, and then you're break even on your second contract, or you're break even on all your contracts because you created this. But what if? What if it breaks? What if it breaks? Does that make sense, guys? What if we'll screw up the perfect trade 1,000 ways? Now here's the other one. You ready? This is the one that we don't like to talk about. This is the one that you guys don't want to address. My rules are no longer met for the trade. I don't have areas inside of triggers. I don't have momentum. I'm going to enter anyway. Because what if it decides to go up when I didn't get paid while it was going up earlier? Anyone ever done that? And then you do this. Well, what if I give it just a little more room? in case it wants to go up? What if I add on to my position without the rules? Because what if it decides to go up? And suddenly you're taking $1,000 loser because you convinced yourself. The what if monster says, but what if it goes? Pete, hold that position. What if it goes? Ron, break your rules. And guys, the what if monster will screw you up 9 ways to Sunday. You can avoid that monster by committing to a checklist. So it's never what if it wins, what if it loses. It's I sure hope I followed the plan that I know wins more than it loses. And when you know exactly why you're getting in, guys, great entries create very manageable trades. Not only do I have a plan for entry, but if I enter that high probability trend trade, I know exactly how I'm going to manage it. And if here we go. Wow, where'd we go? If I enter a 50-50 potential to break trade, I know exactly how I'm going to manage it. And if I enter a momentum trade, I know exactly how I'm going to manage it. And if I enter an HVA trade, I know exactly how I'm going to manage it, guys. So the more trades you take, the more management plans you have to memorize, the more entry rules you have to memorize. But if you start with the most basic, highest probability, best chance of success scenario, this becomes second nature. You don't have to worry about the rules because they happen instantly. You don't have to guess about the management because you've practiced it on simulator. It's just if then. Guys, that's what separates the fearful, erratic traders from the people that are finding consistent profits. It's the ability to do the same thing every time, and when the rules aren't met, it's the ability to wait, to sit still, to do nothing because there's just nothing to do. Does that make sense? I hope so. Because I'm going to take a break. And when I come back, we're just going to watch the live markets, guys. We're going to watch the S&P on NinjaTrader, and we're going to watch the NASDAQ on TradingView. And if the rules are met, that's exit conditions. If the rules are met per the KISS plans that have been put in the room 10 times today, if I can look at NinjaTrader and have the rules met for a high probability trend trade or for a medium probability trend trade, we're going to pull the trigger, we're going to manage it. If I can get the rules met for a trend trade, there we go, for a trend trade, we will pull the trigger. Now here's the other side of the coin. If the rules aren't met, I won't hope, I won't wish, I won't pray, I won't want, I will sit on my hands and do nothing. So what you guys are going to find is that in the next hour and a half, we might take one trade. We might take two trades. Who knows? Maybe there's three. I don't know. But we're not going to pull the trigger if the rules aren't met. So what's our read? Triggers up, transition, room to trouble. Trina, they're trying to break it right now, right? They're trying to break it. Let's get some separation so we can say without question that that area has become resistance. Now watch this. In 5 seconds, 4, 3, 2, 1, boom. That bar is done. Now we have separation. Do you see it? So now the rules say we have to pull back and get an entry. And if they run without us, man, it's just not our money. So I'll leave you guys. You want to watch this or you want to watch NinjaTrader for the next 5 minutes? Uh-oh. They're not running. Let's watch this. We'll see if resistance behaves as support. Guys, I'll be back in just a couple minutes. Go stretch your legs. Back in 5. Sorry, there's going to be a little lapse in the YouTube, and I apologize for that. If the perfect trade if the perfect trade, guys, is momentum, path, and entry. If you're learning the software and you don't know these lessons, this is your opportunity to ask a question. Momentum is defined by a separation between the small and large. Does everybody see that we have momentum in this trade? I hope so. Path is defined by nothing in the way. A mid-band is not a termination condition if the large triggers are not a full bar away. We have path. Entry is defined by a pullback to an area inside of triggers. Initial stops are placed where the market shouldn't go. That is it, guys. 100% textbook. That's the perfect trade. We had it. We had momentum. We had path. We had entry. That's the most basic approach to the software. Now this divergence from a yellow 1-to-1 is a little bit of a red flag. What it says to me is, hey, it could push a little higher in that range, which is why it's your right to force confirmation, to force the market to go in the direction of your trade, to not have to put your stop all the way up here, but with that confirmation, it can go just above that reversal bar that gets you in. So guys, this is how you grow. From the very basic, there's a lot of opportunity to do things a little different. There's a lot of opportunity to pump the brakes. There's a lot of opportunity to sit on your hands and say, you know what? Not yet, not mine, not gonna do it. I'm gonna wait for it. I'm gonna make it be better. All S&P longs today. That was a fun ride. And I just took the short, Pete. And so did you. Market reverse from nowhere. Odds favorable. Potential to break. In at the mid-band. Knows where the market shouldn't go. You're okay, Trina. And nicely done. Great trade, Pete. This is another one of those instances. Because at the time of your entry, you didn't have a clear path. Do you see it, Pete? You totally traded directly into a fib. You told yourself it was 50-50, but it's not. But you knew that if it was going to break where your stop goes, and now this is just me, and everybody's different, and Pete's got a set much bigger than mine. I'm not leaving, what is that, 0.225? I'm not leaving $250 a contract, $500 risk directly into a termination condition from a bad top. I refuse to. Can't make me. Not going to happen. That's a lot of risk. This is another one of those instances where you could say, I'll force the market to give me the reversal bar in the direction of my trade. And that $500 risk suddenly turns into, let me do the math, 12, I don't know, 2 or 3 maybe. And you get a lot more profit out of it. So remember that you guys are in control of the entry. And when your small chart gives you 3 divergences in the same price range, party's over. That's a termination. Market's more likely to push higher. And that's exactly what it did. And that's your mid-band area doing its job from a bad top and a market that has been nothing but up for the last couple hours. And if it's really going to go down, they'll clear everything. All right, so no trades to take right now in the S&P. We already took the one. We got our $300. We're up $600 on the day. We're feeling pretty good about it. What are we waiting for? We're waiting for odds favorable momentum. We're waiting for the clear path, and then we're going to wait for the pullback to the area inside of triggers. Man, they pulled to the lower area. They still haven't broken below it. Everything still says up, but that stupid zone is in our way, which means that we just don't have a trade right now. Does that make sense? I've got no room on the 1 minute. Carn Sarnet Dag Nabbit. Sons of Bumpuses. I'm in a holding pattern. But Mark, it's going down. Can't you go short? No, my rules say only long. But Mark, what if it breaks? What if it doesn't? But Mark, can't you just get in at support, hoping support holds? Of course I can. But I'd be breaking rules, and I can't do that in front of you guys. It gets me in trouble. So this is where I say, what do you guys want to talk about? I don't have any rules met on this chart. I don't have any rules met on this chart. Actually, that would be one of those instances where you could say with the momentum, with the path, I already missed my entry, but we haven't broken those 3 divergences. So I'm going to keep my do nothing until we get below that problem add-on. What would you guys like to talk about? If I don't have rules met, I can't trade. Just can't. Not allowed. You guys want to watch crude, see if they set up? 2 triggers through, a lot of momentum. If I don't get a 3rd trigger through, I don't have rules met. If I do get a 3rd trigger through, we'll look for the trend trade. Wayne, I see you typing. If you want to repost your charts, we can go over them. Of course I did, Wayne. We started early. If you want to repost them, I'll be glad. I would be happy to. I like what you're doing lately. I guess I could chase them. And I appreciate that you post them in the room. But if you know you're going to ditch before class starts, it's all right to hold them. They'll be in the video. I even gave Trina a picture to give you. Because there were great lessons in here. This was the first one. I think there were 3. Were there 3? Did you post one more? This is why chasing is hard for me. I have to go through every post in the entire morning and look for your name. And I think it was just 2. Was it just 2? Only 2. Cool. So here we go. I love the annotations on the large chart. The small triggers are up, defining the trend. You're on the strong side of the triggers, letting you know that it's more likely to hit targets than it's not, right? And Wayne, it's the old wake up 3 minutes too late trick. And that's okay, because what you did is you took the second leg. You had the expectation, because with strong triggers, or from the strong side, with room to trouble, this trend trade is more likely to hit trouble than it's not. Does everybody get that? Creating expectations based on the look. And it goes back to that same thing that we talked about, I don't know, maybe 50 times so far in the last 3 or 4 days, is that if every time you read your large chart, you say, I'm on the strong side, 1 minute areas are most likely to break. I'm creating expectations for the move. Wayne, is it safe to say that's what you did? And because you did that, because that expectation was in play, you were very comfortable catching the second leg of the trend trade because you knew where the market was most likely to go. Is that a fair assessment? And now let me show you something, Wayne, that I don't know if you know this lesson. Let me find it. Because it was a good one. Dun, dun, dun. Here it is. And I sent it home with Trina for you, just in case you didn't come back. Here we go. Let me open it up so I can make it bigger. Boom, 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 boom. I like my sound effects. So what you found here, Wayne, was what we call an HVA breakout. And what that means is that bar that you said closed above, which was a great observation. Do you see where the high volume area of that line is? That's the one that says, hey, the highest concentration of sellers is above that line in the sand. 70, nice. Go have some fun, Ron. Hit them straight. I'll see you in the morning. So, does everybody in the room see how the HVA held? The HVA held, the HVA held. And in all three, the high volume area, the bars going into it were below it. Wayne, that was your, let's give it a shot. And your entry is perfect. That down bar is your entry. And I wasn't sure if you knew that or not, but that's one of the things where if I'm in the trend trade and I see it hold, I might use it as a management opportunity, right? I might use it to tighten up a little bit. And then once it breaks above, it's just life is good. Let's go finish the move. So I wanted to make sure that you had that picture because everything you did was picture perfect, but there may have been just that little extra something that wasn't on your radar that may show up on your radar next time you're in that scenario. Good stuff. And then this one, I love this one too. I was gushing about you a little bit this morning, Wayne. Don't make it weird. Triggers are down, defining the trend. Strong side of the triggers, creating expectations. Room for days. Life is good. Have you guys noticed that the large chart read is always consistent? First, it's direction, relationship to the triggers. Is there room to make money? If you get in this habit, life gets easy. The zone is not broken. Excuse me, the zone is not broken. The zone is not broken. The zone is not broken. Separation. This one broke the zone. Perfect recognition. And then with those strong triggers, support becomes resistance. You catch it on the way away from it and take it right to trouble. 440 in under a minute. Excuse me, 1 second. Sorry about that. And it's perfect. Beautifully done, Wayne. Nicely done. Miss Claire, I just saw you typing and it let me know that I got distracted. Don't let me get away with that, Claire. If I miss your pictures, guys, if I ever miss your pictures, I promise it's not intentional. I would never in a million years ignore you. Unless like you did invite me to your birthday party. So if I ever miss it, it's completely an accident. Let me know. All right, so strong triggers up, strong side of the triggers, room to trouble, and then Claire, there are HVAs all day long, right? I don't really have rules met. There's your momentum style trade. But here with weak triggers, I do see the HVAs. It is bouncing off the outer band. But it's not a true HVA trade. Does that make sense, Claire? And it's not quite a momentum trade. And it's really just everything going up and you getting in above the line in the sand that is the HVA. And it works out beautifully. It really does. Because with everything up from the strong side and nothing in the way, that market's more likely to go up. Just a little unorthodox entry. Does that make sense, Claire? The HVA lines support more up, but there's not really rules. But what you did have, and it's hard because your charts are so squishy. So these one-to-ones in that zone can be problematic. The market breaks away from the one-to-ones, and it does pull right back to the one-to-ones. And then you get in on the way up after the break and the hold, and then you just ride the large chart. The HVA was just warm fuzzies right at the one-to-ones, making you feel better about the push. It's a great trade. I don't have rules for it, but it's good recognition. All right. Let's see what we have here. Um, that's the trade, Claire. Market reaches a large chart termination. There's your white bar from the termination. There's the open above the HVA line. And you just jump the fudge in. You don't even wait for the pullback to the HVA. Beautiful. And man, that's a heck of a good morning. And it's perfect. Because that HVA line wasn't there yet at entry. Does that make sense? Because this is the bar that created it. So, Claire, are you using that pattern, that white bar pattern, that when it opens and the next bar opens above, you're using that for entry? Victor, that's the one that John Novak taught. That's the usage of that bar that starts on the termination. That is flawless execution, Miss Claire. And if that's really going to be a bottom, look what happens. And look at the target. That's $7,000 on a 2-lot. Holy wow. That's amazing. Nicely done, Miss Claire. And then it's so darn nice you posted it again. You said, Mark, I don't know if you noticed. I don't know if you saw it, but that's a hell of a nice trade. I'm going to post it again. Did I click the same one twice? That's it. Hold on. Nope, it is the same trade. Was there supposed to be a different one, Claire? I mean, I would post that one twice. I got the exact same. It's different. It's a different address, but it's the exact same trade. So you may have one in the archives, just a little bit in there. If you find it, let's get it posted. Only 2 triggers through. Not my best look yet. Odds favorable. Clear path. No areas inside of triggers, which means I can't define an entry, guys. And once I get to the wrong side of the triggers, I don't know if, when, or where the market's going to continue down. So if I choose to take a trade, I may choose to wait for a confirmation bar. This one doesn't fit the plan because I can't define an entry. Does that make sense to everybody? Momentum is good. Path is clear. No areas inside of triggers. If you enter at an area, you're hoping the area holds. Once you get beyond the triggers, guys, you don't know if, when, or where the market is going to go down. And look at it just keep messing with you. Am I missing fibs? I might be. Why do you say that? I've got my tick replay. Let's see. That's the same fib. That's the S&P. I can reload historical data and see. Show me yours, Miss Trina. What makes you think I'm missing fibs? And I might be. There's a good chance, guys. I change my charts up all day long for educational purposes. I'm going to reload data. We'll see if it changes it. That's always my first start. But guys, if my charts don't look like yours, let me know. We'll talk about it. There's the chance that we're different days back. There's the chance that we're in different time zones. There's the chance that there's just a skosh off on our tick data. Skosh being a technical term used by the greatest minds of our century, of course. So while that reloads, we'll look at TradingView and see what it's doing. Man. We took the one shot, didn't work. Now it's up. Now it's weak side. But there's nowhere to go because of the zone. And when there's nowhere to go because of the zone, holy awesome. Look at that. You had a 5-1 fib there, Trina. Man, that was fortuitous, I believe is the word. I could have used, oh, there it is. I had to reload. Trina, you saved me. You saved me. You're my hero right now, in the moment. It may not last, but for now, you're definitely my hero. It's still calculating. Guys, call me out if it looks wrong. I change stuff every day. Victor saved me on fibs once. Everything is down. Little base hit. Market continued down after some monkey business. It breaks. There's your pullback. Right to the area inside of triggers. Half off. Oh, it didn't make your fib. So trailing stop. Everything is down. The momentum is building. The pullback, perfectly defined entry. Quick targets, because the momentum isn't the best, right? And then they're just like, you know what, Pete? You showed up, Mark, on the last one. We're going to mess with you. And then we're going down. Just to prove that this is Mark's room, dagnabbit. Not really. That's funny, though. And it does that sometimes, right? And Pete has a very definite plan and trailing stops that he uses. And guys, that's one of the risks of trailing stops. The perfect entry. Expectation to the fib, without a doubt. It just, that little fluctuation, that little dance got you. And look at the bounce that it created. And once it got to Fibonacci resistance and every trigger was down and below, it did hold. And if you waited for the reversal bar, you got a part of it. Whoops. All right. Let's see what we have. Triggers down. Strong side. White bar at the area. Opens below and you just jump in, and you're really doing a great job capitalizing on that look, Claire. And it does pull back to trouble. So you do have a 15-minute termination that it pulled back to. Do you see it? Broke below the 1-to-1s. That was your pullback to it. That was your pullback to it. That was your close below from the down HVA. And just, my goodness, you're making it look easy. Can you guys feel the confidence that Claire has in her plan? Look at her entry. Pulls back to the 15-minute area. White bar, open below. She goes down with it. Hold on. Hold on. Pulls to the 15-minute area. White bar, open above the HVA. She's long with it. And then even some shenanigans, not a pullback to the area, but with everything going up and nothing in the way, she's using the exact same pattern to find a way on the breakout. Telling you guys right now, consistency is what it's all about. Doing the same thing every time, because you can prove that it wins more than it loses. And when your plan is true, when your trade is good, creating expectations that allow you to hold for bigger moves. And Claire, it looks like you're up over 10 grand today on a 2-lot. And I don't know if it's sim. I don't know if it's live. I don't know if you're trading the Nexgen Pro Trader funding. I wish you were with your consistency. But guys, that's trading. The same thing every day. The same looks every day. The same advantages every day. Putting you in a position to do the same thing with I mean, just wow. Just wow. Not yet? Man. Couldn't trade into the zone, so you didn't take that one. Rules keeping you safe. Now we are like 3 days on the weak side. If we got to close above the triggers, we've got about 15 points to trouble. Triggers are up. Weak side of the triggers. Room back to trouble. That would be an enormous amount of risk from the weak side of the triggers. You'd have to decide whether or not that was for you. We're going to take all of them that fit the rules. But this one hasn't given the entry. So we're not. And then once again, I'm going to ask, guys, is there anything you want to talk about? Is there something on your mind? Is there a trade that you're working on? Is there a plan that you have that you want me to look at? There's crude oil. They still can't get it together, can they? They're just hanging out. S&P. This is, and you know what? We'll just go from open. That's the S&P movement since open. We've made $600 together live in it on the most remedial 101 approach to trading ever. Pete, you've taken a little more out of it because you have a plan that is rooted in advantages. Nicely done. Did you guys know that the S&P and the NASDAQ tend to be similar? Whoops, cancel. Isn't that wild? They're very similar. The rules work the same on either. Did you know that gold marches to the beat of its own drummer? Psychotic little market. I think that the TradingView slows it down and makes it a little more tradable, personally. Personally, look at it go. Whee! Nothing to do. Let's see. All right, I'm going to start flapping my gums. No, I'm not. Trina's going to keep me busy. Thank you, Trina. So you went to your mom's room. Just kidding. Strong trending. It's not a strong trending market yet. That's one thing because of that reversal bar, Trina. But everything is down, and you're below all of the areas that could stop the market. Everything is down, and you're below all the stuff that could make a bounce. And you jump the fudge in. And then you make money because of momentum and path. Because of momentum and path. Jump the fudge in. It's funny how you guys have adopted that JTFI. Makes me smile. Makes me smile. I try not to swear much, but I am imperfect. Every now and then I fall victim. Jump the fudge in. Every indicator on every chart says down. And you go down with it. Nicely done, Trina. How do you reload, Ninja? When you say reload, Elvis, you mean just kind of like give it a little refresh? There's a couple ways. You can click on your chart and hit F5. I'll do it on crude oil. So if I just click somewhere on my chart and hit F5 on my computer screen, it'll reload it for me. And that'll kind of go through everything. You could also right-click on your chart and reload all historical data, and that'll kind of get all the tick data to reload as well. If that doesn't fix what ails you, that's where Jason comes in. It has completely disappeared from your taskbar, so it's not down here anymore. That means that it crashed and you'll have to reopen it. So if it goes away completely, you have the dreaded Ninja 8 crash, and you're just going to have to pretend like it's brand new. You're going to have to double click on the icon, log into it, bring it back up, reconnect. So if it disappears completely, it's crashed. And if it crashes, guys, if it crashes like 3 or 4 times on the same website, same workspace, it means that there's something corrupt in your workspace and you're going to want to rebuild your workspaces. If you're not comfortable with that, Jason and Tech is amazing, and they did. They know about the fibs, don't they? So go to your search bar and type in Ninja for me real quick. And does it come up like this? Does it show NinjaTrader app with the... So try to open it like that. I'm not sure why it would disappear from your taskbar. But if you do that and it comes up, once it's open, while I have your attention, you can right click down here and you can pin it to your taskbar. It's possible that you accidentally unpinned it. I've done that before and like, where did it go? It's because I accidentally unpinned it. And see that? I just unpinned it and now it's missing and I don't see it. And you may have done that on accident. I've never actually done that. That was a good lesson. Thanks, Elvis. And now let's see if we can figure out how to repin it. So we'll go NinjaTrader. Ooh, there we go. Pin to taskbar. Bonk. And it's back. Cool. Elvis, thank you for that. That's something that I've never even thought of. Never even thought that I would need to explain in the room. Telling you guys, when you ask, we get answers. Good stuff. And then if it just absolutely frustrates the ever-loving snot out of you, get with Jason. Look at him go. Look at him go. Right to a VWAP, right to support, right to no rules met. That was a big move, wasn't it? Does anyone in the room think that with just a little bit of practice, this is the S&P, that's where it opened. Does anyone in the room believe that with a little bit of practice, they're not going to find $400 or $500 a day pretty easy? If you have convinced yourself of that, you got to learn how to study, guys. You got to learn how to go back and test and make sure that this methodology is what Nexgen says it is. And I know it is because I wouldn't be sitting in this seat if I didn't believe it. One of the ways you can do it is every time you see momentum and the potential to break, guys, circle one of those tails on your large chart. You know what? Let's do one more picture. We use two charts for a reason. And your large chart, here we go. Your large chart is that big, slow-moving chart, that broad stroke of a brush, that hard-to-see change chart. Does everybody see that tail on a large chart? That happens because price pushes up and can't form a new bar. Inside of that one bar with momentum and path, guys, you get a pullback, a bounce, and continuation in the perfect trend trade. I don't know if or when this tail is going to form until I go over to my small chart for rule number 3. So you can use that refinement process to pinpoint areas inside of triggers where that tail is most likely to form. Now this is a couple great things. One, that's your pattern. That's the pattern that you can prove wins more than it loses. That's the pattern that has a specific set of rules that makes it predictable, that makes it testable. And what you can do is when you have the rules met, here we go, odds favorable momentum and clear path. Guys, can you give me a Y if you see the momentum and path over here? It's important. Those are your first two. That's your core. I don't have to take the trade to learn the pattern, guys. I can circle that tail because the rules are met and back it up. What time did that happen? 10:23. And look at that. It pulled right back to an area inside of triggers. And we actually took it live, made a little money. That feels good, right? And then we back up and we're going to look for the same thing. Where's that momentum and path? That strong trending market, we're going to look for separation because we're new. There's another one of those, potential to break. Let me back it up. Do, 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 do. We did it again. We took it live, $300. So we're up 600 on 2 trades that fit the rules. And let's back it up again because I'm not always in front of the market. There is momentum potential to break. This was after the open. Let's go back. Does it fit the rules, guys? Son of a gun, pull back to the areas inside of triggers. Do you guys see it? So we've done 2 live that fit the rules for a total of 600. There's another one since open. That would put us at 900. Hypothetically, historically, doing what we do. There's another. Pull back to the area inside of triggers. So hypothetically, can we say 1200 going back historically, circling these? Now, guys, there's a lot of people like, I just can't find opportunities in the market. If you can't find opportunities in the market, it's probably because you don't know your rules. It's probably because you can't identify momentum, because you don't understand the potential to break. It's probably because you thought since it almost reached the area, it's not a trade. This was 4:30 in the morning. I was sleeping. Thank goodness. But oh golly gee, there's the pattern again. So one of the wonderful things, guys, is you don't have to take trades to learn the pattern. You can study it historically. You can go back and you can say, can we use hindsight to make our... No, because it's the past, right? But Elvis, can't you use the mistakes you made as a child to become a better adult? Of course you can. And that's kind of what study does, guys. If you burn that picture into your brain of what it means to have your rules met, in the live market, you can say, I have momentum, but I don't have a clear path. I'm not going to look for an entry, right? And then it's done. There's nothing else to do. I have momentum, but I didn't have a clear path because divergence prints, my rules aren't met. I'm not taking an entry. Of course, Elvis, if you're not making mistakes, you're not trying. But that's a philosophical discussion for another time, not the room. So guys, the triggers are down. I'm definitively on the strong side of the triggers, but I don't have any room. There's no room whatsoever. I don't have an entry. Does that make sense? Once I know my patterns, trading is easy. The hardest part about trading isn't learning the patterns, guys. The patterns are simple. The patterns have 3 rules. The patterns are 3 advantages that create the perfect trade. The hardest thing you will ever do in trading is absolutely nothing. The most difficult part of trading is embracing the idea that 90% of the time you're going to do nothing. That 90% of the time, the market isn't going to give you what you need. Hold on. This picture is in one of the documents I gave you. There will be times when your path isn't clear. Guys, there will be times where your entries aren't defined. There will be times where the momentum isn't there. This is 90% of your day. Be patient. The futures markets trade an average of $220 billion hourly combined. The S&P typically exchanges $174 million a day. The NASDAQ is like $269 million a day. You don't have to be the first one in. You don't have to be the last one out. You have to find a way in all of that chaos to come home with $400 a day to put yourself in a 6-figure trading income. Does that make sense, everybody? Is anyone other than me fallen victim to the idea that I need to be in to make money, that I have to be busy to make money? You don't. And even though the market went all the way down here, I still made 300 in the move. And even though the market went all the way up here, I still made 600 in the move, right? And if I woke up early and had a cup of coffee, there was another opportunity. And if I back it up, there was another opportunity. And if I was up at 3:40 a.m., like some of you were, there was another opportunity. And all the way back to midnight, guys, there was probably 15 to 1800 conservative, hypothetical, right? And then I go back to yesterday and I'm like, oh my gosh, another opportunity. And I scroll back and I say, egads and little fishes, another opportunity. And then I scroll back again. No, this can't be true. Another opportunity. And again, right? And again. And guys, I'm telling you right now, if you stop searching for the money and you start looking for the patterns, life gets pretty easy. What do you want to talk about? You know what? You think about what you want to talk about. I'm going to reload data because my triggers look a little wonky here. When I come back, it's the last hour, guys. I don't have rules met for a trade, so there's nothing for me to do. Stretch your legs, touch your toes, pet your dog. I'll be back in 5. I missed your best post. We will start with your best post, Pete. I got you. Sorry about that. I got on a tangent. I do that sometimes, especially when you guys aren't asking questions. So if you want to be saved from my tangents, post a question. Finish strong, I hope. We'll see. Market's going nuts. So Pete says I missed the best post. Let's see if he's right. This is my live account. Normally I take an identical trade in sim on NinjaTrader, but missed these two. Was busy making money. I love it. 2 shorts and cover. More shorts, half off 10, balance off, fib on NinjaTrader. $2,900 for the day. It's a great day, Pete. That's an amazing day. Guys, if you're not making $2,900 a day, That's okay. Pete's, see the big X next to Pete's name? Pete's got 10 years. 10 years with Nexgen. 10 years of listening to someone in a live chat room talk about the advantage of momentum. 10 years talking about Fibonacci. 10 years talking about three divergences. Guys, everybody's in their own place. Everybody's at their own pace. If you've ever played sports, just think about it. You go somewhere and you shoot pool, right? You've been shooting pool for a year. The guy you're playing's been shooting for 10. He's going to beat you. He's going to do better than you. You go play golf with the scratch golfer and you play like I do. You're going to lose. It's just part of it. It's okay. Everybody's at different levels. So know where your level is, right? If your level is inconsistent, if your level is fearful, if your level is challenged by the fast movement, latch onto a plan, something that maybe slows things down for you, something that keeps you a little more patient, something that puts you in the best trade, not all of the trades. And what you'll find is that suddenly, miraculously, trading isn't nearly as stressful and you're up a level. Most of you don't recognize when you go up a level. I'll recognize when you go up a level. We'll celebrate your victories. I'm a huge fan of celebrating victories. All right, price reaches Fibonacci support. Price reaches a divergence low. Absolutely none of the triggers break. Absolutely no reason to go short. It's a textbook termination condition. It might go down. It could, but the rules aren't met. Still have momentum. Almost 4 triggers through. Come on, 4th trigger. Right now, it's only the potential to break, which means if divergence is true, I don't have a trade. If divergence isn't true, my job is to wait for a pullback to the areas inside of triggers. Does that sound familiar to anybody yet? There's no tail on this bar. We're predicting where it would be if the small chart gave a pullback. Divergence is the biggest killer of these trades. The plan that I follow says no divergence. Who wants the microphone? Who wants to teach the classroom? Just kidding. You can't have it. I bet most of you could. I bet most of you in this room, you don't even know it. And you could talk about momentum, right? You could say, well, yeah, I know what momentum looks like. Mark talks about it every day. I've seen it. I've committed it to memory. It's just one look. And you could probably talk about a clear path. You could say, well, sure, don't trade into areas on a large chart. I used to could. Don't trade into areas on a large chart. They could stop the market. They could create a bounce. They could cause a reversal. Just count some triggers. See what's going on. And most of you know the phrase, pull back to an area inside of triggers, right? Most of you know that's where the entry comes from. Most of you know the rules. If you've been with me for more than a week, the language is starting to become familiar. The patterns are beginning to step out a little bit. The looks are starting to jump off the page. It's not your ability to learn these patterns that is the challenge that new users face, guys. It's the ability to wait for the pattern. Didn't stay at the Holiday Inn Express last night. I'm not a brain surgeon, but I did stay. Not everybody's going to get that joke. I love that joke. So, guys, if you feel like you're struggling a little bit, here's my huggy, touchy-feely moment. If you feel like you're struggling a little bit, like maybe you're not as consistent as you wanted to be, maybe there's something going on that isn't doing it for you, ask yourself if you know these 3 concepts and prove to yourself that you know these 3 concepts. And if you do know these concepts, and I had this talk yesterday with a gentleman. You old timers will recognize the name Siva. Does everybody know Siva? Siva's been with Nexgen. He bought software May 7th, 2007. I have that burned in my brain. 18 years ago. And we were talking yesterday, and he said, and I'm going to quote so that I don't misquote him. Where did it go? Da-da-da. He says he bought the software May 7th, 2007, attended a seminar, and he hasn't paid for software with anybody else yet. And then he says, most don't do the work. I keep telling them when someone posts a chart, the only thing they look at is how much money they made. Wrong thing to focus on. They never pay attention to what the indicators did, how it helped, etc. And he says, even today, I review my charts on Saturday. Guys, I think if you're brand new, you review your charts every day. And you ask yourself the two magical questions. What worked? What didn't work? And what worked very often is holding hands with, skipping down the path with what feels easy, what keeps you relaxed. And what doesn't work very often makes you feel nervous. And guys, it's because you know your rules. If you get nervous in a trade, it's because you know you're breaking your rules more often than not. But if you do this every morning, if you wake up tomorrow, it's just, I'm paraphrasing Elvis. It's a private conversation. I don't want to post his typing in the room. But he says people don't do this. So here it is right here, Elvis. The gentleman that all of you seem to idolize in the other room and you're impressed by said, study your damn charts. Go back and look at what you did. Stop focusing on the money. Start focusing on the process that produces the money. When a trade doesn't work, analyze it. Where did I make my mistake? Did I trade into an area, right? Did I get in too soon? Did I get out? Guys, if you put the work in, this software will change your life. If you keep chasing money, it's not going to work. And I'm not trying to dissuade anybody from being with me in this room. I want you in this room. But if all you do is focus on the money and not what creates it, I did. It's right above you. This is it right here, Elvis. Ask yourself every morning what worked, what didn't work. That's it. That's all it is. Study your trades. And here, hold on. I'll add to it just to make it a little more complete. Stop focusing on the money. Focus on what the indicators said to produce the results. That's the paraphrase right there. There you go. You chase charts to chase money. Right on, Wooter. I just wait. I feel like when you're trading solid, it's the world's greatest lazy river, right? You get in, you're with the flow, you're not fighting, you can relax, catch a tan, sip a pina colada or a Diet Coke, whatever makes you happy. But when you're going with the flow, guys, when you're doing things right, when you're not fighting, when you're not worried about whether you're winning or losing, but you're worried about the execution of the method, trading becomes stress-free because you'll never know what's going to happen. You'll never know what's going to happen, right? That's it. Look at the pattern, not the money. Elvis, absolutely. And if you go back and look at your charts from 2 or 3 days ago, see if your annotations are still correct. I like that, Wayne. Did you write what you wanted it to be, or did you write what was actually happening? And guys, that's where posting in my room pays huge dividends, because I will call you on it. And let me show you exactly what I mean. If you go through every time and you say, hey, this is momentum, I'm going to say, yep. If you say this is a clear path, I'm going to say, yep. If you say this is an area inside of triggers, I'm going to say, yep. So you're going to tell me what you see, and I'm going to confirm or deny, right? But if you tell me this is strong triggers because it's green, we're going to have a lesson on strong triggers. And your job, when you wrote strong triggers, is to go back and reannotate and say, no, these were not because. So not only will you get the correction, you'll get the fix, right? This was a clear path. No, this was a termination because. This was an area inside of triggers. No, here's the lesson on where your annotation, where your analysis failed and why you struggled with the trades. And guys, your annotation will be just so revealing. It's all in the yep stick. I don't understand the phrase. So this is one of those times. Because of divergence from a one-to-one, yep stick. Some of you will take the midband. Some of you will wait for confirmation. That's your right. So I used to annotate charts with what I wanted to have happen. I knew that if I annotated a chart, and I love bringing up pictures. If I annotated a chart and I regurgitated this phrase on the chart, anything bad that happened in that trade was somebody else's fault. It was the market. It was the stupid trade didn't work. The methodology is crap. John Novak is a shyster, right? Because I wrote these rules on the chart. It has to be true. And it's just not true. What you write has to be true for the read. Black Friday starts 80% off for TradingView, Big Rat. That's awesome. Don't be sad. Don't be sad. That's awesome. I didn't realize that. 80% off at TradingView, guys. That's amazing. Hey, Russ, can Nexgen evals be used on NinjaTrader? No, sir. They cannot. They are executed on TradingView or one of the accepted platforms. And if you bought those and you aren't going to get TradingView, reach out to the help desk from the website. Where did it go? I think it's from the home page. Reach out down here and let them know what's going on. Right on. Man, we want you to be successful, Russ. I mean, I'd love it if you were with us. But if you're killing it on another one, that's amazing. Kill it. Keep killing it. Do what you're doing, right? And if you did buy some thinking that NinjaTrader was going to work for you, I can't imagine there's going to be a challenge there. Reach out to them, let them know what happened, and see what they can do to help you out. And that's it. But you have to have TradingView, Elvis. NinjaTrader is not one of the ones, right? And yeah, Wooter, you're absolutely right. They do that a couple times during the year. They'll throw out killer sales on TradingView. Guys, TradingView and NinjaTrader are just different. This is a 15-minute bar. NinjaTrader is a dynamic Renko bar. It moves a little faster. Oh, it moves a lot faster. Look at that. Divergence from the one-to-one. One of my favorite reasons not to just get in at the area. Small chart management, my friends. You have TradingView now. I don't know how to navigate it at all. You know what's cool, Elvis? I'm going to show you a couple different things. Yeah, you've been there, right? Oh, that's the help center. That's not what I wanted. I wanted TradingView knowledge base. So, come on now. I'm going to give you some resources, Elvis. Something to homework for tonight. And I'm going to do it two ways. Trading view, knowledge base. Let me make sure that I'm getting the right one here. I used to have them. Knowledge base free. That's help and support. There's the knowledge base. There we go. So here's the link from 100 million users for everything that you could ever do with TradingView. Now, if you go to the instructions from Nexgen, there is everything that you need to set it up. And of course, tech will always help. So don't be afraid to go to the instructions on the NinjaTrader, on the Nexgen site. But remember that we're not TradingView. My job is to teach you to read indicators, not necessarily teach you how to navigate a whole new platform. Otherwise, I would never be able to teach people to read indicators. Now, if you go to the playlist section, this is the TradingView 60-second series. Guys, I've built some videos. How to read a large chart, the logic from the trend trade entry, what a trend trade looks like, strong triggers, momentum trade, indicators, and defining a trend using the 15-minute. And I could probably put together a lot more videos. If you tell me what you want, I'll do these little videos. But that's a great resource for you, without a doubt. And then, if I hit the old search bar here, TradingView indicator setup, TradingView plan and rules, navigating TradingView, placing trades, stops, targets, market replay, a lot of winners, 60-second series, more winners, have a plan, strong trigger. I mean, there's so many resources. So you're going to have to do a little bit of work. You guys know I'll always help out in the room, right? Show me a chart. That's it. But don't make me your only resource for learning how to use TradingView. Because if you do that, TradingView is going to have to send me a check. They've got 100 million users and every answer's on the internet. I'll help you find what I can. I will help you find what I can, though. I tend to be pretty agreeable, I think. I could be wrong. I don't know. Some of you would say otherwise. Heck, some of you have sent me emails saying otherwise. Says, darn one-to-ones. Divergence. You did get the confirmation bar, so at least risk was low. Sometimes trades don't work, guys. Sometimes trades have the best intentions and no follow-through. Sometimes there's just not room, right? Claire's long. Termination, white bar, open above. She'll show me a picture with like $78 million profit up there in just a little bit. Maybe not. I don't know. We'll see. That's tough into a bunch of trouble against strong triggers. There's just nowhere to run. I love room to targets. It's a game changer. Room to targets is an absolute game changer. Absolutely, Elvis. There's so many great resources out there. And of course, you know, if you're struggling, tech is here. When we first offered TradingView indicators, we spent a lot of time in the room getting people transferred over and helped a little bit. But it just got to a point to where it got overwhelming and it was eating up all the resources of the education. And John Novak politely asked me to stop and to let you guys do a little seek and find. We still have 30 minutes. When I start rambling, guys, it's hard to stop. I'd love it if you said, Mark, this is what I want to talk about. This is what I need help with. This is what I'm working on. Have you seen anything that I don't see? Here's a couple PDF books about getting your mind right. Those are kind of nice. If you like to read, I like to read. I do enjoy a good read. Do you guys know that Nexgen's trading plan has been consistent for almost 30 years? Let Fibonacci hold. HVA trades your first shot. If it continues and everything is strong, it turns into a trend trade. If you hit an area, stop and wait for the reaction. Guys, we've been teaching this. We have been teaching this since we started. In 2004, pull back to a midband, close below, go to the next area. That's your trend trade. You do miss Ninja Trader, but you don't miss the crashes. Took you a summer to learn TV. Yeah, but you're doing great with it, Claire. I like Ninja Trader too. I'm not going to lie. And it depends. If you are trading Apex and you don't care for it on TradingView, but you really like those minute bars, one of the things, I built this bad boy. Well, John Novak built the core. I modified it to make it look like my TradingView chart. But it's a 15 minute, it's a 1 minute, it's all that good stuff. Elvis, I did it every day for the last 3.5 years. And if you really, so here, let me give you one more resource. So in the live videos, anything before the 18th. So let me give you the link. If you watch, and the cool thing is you can pause them, you can take a picture, you can come back to the room with questions. But the first hour, we introduce news. I let you know that we're going to do Ninja Trader and TradingView. We talk about the goal. We talk about the rules. You're given everything that you're looking for, how to annotate charts, what the indicators are, where to find them. It breaks down each rule individually, whether it's momentum or terminations. It talks about going back in the live very often, circling tails to find your trades, coming through, and then it goes into TradingView, and it talks about the indicators, and it talks about where to read it, how to read it, what you're looking for, what the trades are, the checklist for entry, visual examples, and all of this for the first hour is exactly what you just asked for. Yeah, we talk about Steve Martin too. Absolutely. Banjos and Muppet shows. So, but it's all there. So you can get exactly what you asked for in the first hour on about 400 videos, probably only about 100 videos that include TradingView. But you can pause it, and if you have a question, take a picture, bring it to the room. But one of the things that we're trying to do is we're trying to get into these live chart reads more often. Everybody's like, Mark, I need a live chart. I need a live chart. I need you to trade live. And we're just trying to get to that a little bit. I'm not opposed to doing it, but until it gets done, I want to make sure that you have something that you can look at. I don't ever want you guys to do without. And who knows, maybe we'll find a day, Elvis, next week where we go through those basics. And if we do, I'll send you a message, and maybe we'll just revisit 101 for one morning in the week. Maybe Wednesday, middle of the week, or maybe Monday. Knock it out on Monday. And that way, We go into the week and we don't really have to repeat it over and over. I like it. Maybe we'll do that. Elvis, you are on it today. You're making this classroom better. Appreciate that. And if we go that direction to do it on Monday, I'll let you know. All right, there's your termination. There's your reversal. There's your odds favorable. Which platform are you using, Elvis? Pick one. That's the one thing I would say is pick one platform. If you're going to try to do both, whoop, divergence printed. I have to cancel because it's only potential to break. If you try to learn both platforms at the same time, you're going to confuse rules. You're going to confuse chart reads. You're going to confuse entry rules. So I would encourage you, pick and commit. Doesn't matter which one. The education is available for both, but make a decision on which one you want to use, so that it doesn't create too many conflicting scenarios. The concepts are the same, but the reads are a little different. Yeah, both platforms being NinjaTrader or TradingView. That's what we talk about in the room. Miss Trina, let's see what you're doing. All right, down, strong, room. I don't even see trigger lines, Trina. So there's where it broke. There's your close, and there's just nowhere to go. And then it pulls all the way back up, and then it closes again, and then it reaches trouble, and you don't believe it, and now it's going against you straight from the target. Green line. Okay. Oh, there it is. Cool. Gotcha. Thank you for that. Tech, Elvis. You know the answer to that. Tech. Go to tech. Let Jason help. So, Trina, there's your pullback. And what you took was kind of a momentum style look right at the zone from 89. It didn't close below, right? You just kind of got in. So you can't call it a trend trade. It doesn't fit trend trade rules. You don't have the momentum that you need for a momentum trade. That was where the pullback finishes. That's where the close below was. And it does, sure enough, go right down to trouble. Can you see the difference between trend trade and momentum trade? In order to just arbitrarily sell that, even after the break, you need that odds favorable momentum. Since it's not present, you're waiting for really, you can't take the momentum trade. You got to wait for it to go up higher, and it does. And then there's the perfect entry. And it does make it. Does that make sense? Guys, can everybody hear me? 100% perfect anticipation. And yeah, that was a crazy bar. I don't blame you for not taking that bar. That's a ridiculous bar. You guys can't hear me? It could just be Ed. Had to add my friend since it was all caps. I don't want him to think I'm yelling at him. And then they made it 4 ticks past your target. Or just playing devil's advocate, did you have your target lower? And when it hit and started back up, you said, oh crap, I better put my target here in case they retest it? Because I'm guilty of that one. Where I'm thinking strong down, maybe. And I'm down here at like 82 or 84, whatever that is. And I'm like, yes, come get me. And then I realize that these areas can create a bounce. And I'm like, uh-oh, hopefully they retest it. Hopefully they retest it. So just a little early on the entry, and it looks like we're a little late on the exit. And you have $1,080 on this trade that's already hit the target twice. Do you see that? That's an enormous amount of risk, especially when it's already been there. And then once again, taking momentum trades without momentum. Huge risk. And they did. They saved you because of the strong side, right? They did make their target with the strong side. But my goodness, your stops don't make any sense at all, my dear. None whatsoever. Do they make sense to you? Hold on. You may have a plan, but there it is at 95. And it made it up to 96. So when everything went against you, you moved your stops even bigger. You didn't even commit to the ginormous stop. You said, oh shit, I'm just going to keep hiding behind things and hope it goes back down. Pardon my French. Yeah. Is that how you're gonna kill the market, Trina? No. So so now it's deep breath. Great lesson. One more step forward, right? One more step forward. Cutting strings, cutting ties with a trade is so hard to do, guys. Cutting, like saying, oh, it's going bad. That was that what if monster that we talked about earlier. Andy, odds favorable, 3 triggers through. No areas inside it, so you're like, I'm going to get back over here on the good side. And really nicely done. Really nicely done, Andy. Great trade. And yeah, you need some synthetics on there. I do too. So I miss all of the morning. And then I typically go grab lunch from noon to 1 Eastern because it does. They go grab lunch too. But the NASDAQ moves amazing typically after 1 p.m. And you're right. There's usually some good movement. And man, you killed this trade, Andy. Nicely done. Nicely done. All right, Miss Claire says, agreed. That's why it took me a summer to learn TradingView. Making money in the morning, switch to TV in the afternoon, and paper trade. Your brain would hurt from all the rules. I'm not that old, but I'm not young. It takes a minute to turn my brain around. I'm just stubborn, Claire. So I'm not that old either, but I am stubborn. I know that I am. But I just confused the two in the very beginning. I would take, and it was funny because I would take, in the very beginning, let me show you how John Novak, and he did a great job when we were learning, or when we were building the plan for you guys. I'm going to show you something real quick. The workspaces, let's let them load up. Oh, he may have changed them. But the workspaces, had all of the large triggers and the background colors, and they look like NinjaTrader, but with some study we realized that you didn't need the large triggers, that you didn't need the background colors to be able to do it, and I made even more simplers. Go to your positions. Go to your positions, Elvis. And from the positions tab, you'll see any open order and what instrument it's on. So right there, 1 over from accounts. It'll tell you what instrument you're in. Thank you, Andy. Absolutely right. Um, so we really stripped it a little bit. And I think that when it doesn't look the same, Claire, you may agree, you may not. When it doesn't look the same as NinjaTrader, it's a little easier to create the separation. Um, sometimes, Elvis, I did crash my NinjaTrader though. Um, so Claire, I don't know if that was helpful for you. It was huge for me to turn the corner. Um, to make the two not look so much alike, and just for me, it made it easier to remember the rules and to do it the way I needed to. So, ma, 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 ma. Reconnect. We'll get some charts back up. You guys don't realize this, but I am as right-brained as they come. I am sunshines and rainbows and shiny things distract me. Um, and the fewest moving parts that I can have on a chart are typically the best. So Trina, for gold, do you want it for gold? For NASDAQ? Um, cool. So there's two ways we can do it. There's your gold workspace, set up exactly as you see in front of me. So if you click on that link, it'll open it up over here, and then you'll just click copy. Well, you have to sign in. And then just save it. And then once you save it, it'll be in your drop down here, so you'll have it completely built. And then the same is true right here. Let me give you the link for NASDAQ. That's the cheating method. Now, if you want to know how to do it because you are the kind of lady that needs to know things, which I like, that's good stuff, go to the settings on your trigger lines. Okay. And then you're going to go to Style. And we're getting rid of color, right? So right there, background above, below, I change them to black. But I mean, you could make them any color you want, really. You could do them yellow, you could do them blue, you could do them magenta. I just prefer black. So whatever color you want to do them, you can do them. If you want it to be gray, I think gray looks nice. It's easy on the eyes. Jen does that. Kind of a medium between black and gray. And then you can make the opacity really thick, really not thick. Play with colors, go through. And make it easy on your eyes. There is no right way to have it. But I did it. I took away the green and red so that you would focus on the small triggers direction. And I took the large triggers off because it's just too slow. It's too slow. They're just a nuisance in the way on such a large chart. You're so welcome. Guys, I love the questions. Don't ever stop asking questions. All right. You're working with Jim Forbes. I love it. I recognize these arrows. Welcome to Nexgen, Kamasu. Get in the habit of taking these pictures. Get in the habit of putting them in there. Have Jim teach you how to write on charts. And you'll get a private session with me every time you post in this room. And I hope he wasn't saying there were trades there, because there certainly was not. Good stuff. Take a picture of the picture. Welcome to Nexgen. Welcome to an interactive workspace here in the classroom where you can get every question you have answered. All you have to do is type in the room. All you have to do is ask, guys. That's the only thing holding you back from the answers you seek. You want to change it to gray, Claire? Did you get everything you needed to do it? I don't think your background is the distraction. For me, it's that you trade like this. Throws me off. I'll make a deal with you. I'll teach you how to get rid of those if you stretch out your charts a little bit. Just kidding. You can do no wrong in my eyes, Miss Claire. So I want you to go to your trigger lines, T3 trigger lines new, and that little hexagonal looks like a nut settings. Click on it. And then all you're looking for is right there under style, background above, background below. And you can change it anything you want. So you could do really dark gray. You could do a lighter gray. You could go darn near white if you wanted to. Whatever makes you happy. That's pretty. I like that. That's just me. But I'm going to keep it black because it's the room. I think if I were the only one looking at them, that might be my go-to. That's pretty awesome looking. Maybe chartreuse. Green? No, green doesn't work. Well, that's kind of pretty. That one doesn't work. Orange. There we go. How's that for a headache waiting to happen? Whatever makes you happy. Ta-da. Good stuff. All right, guys. I guess that's it for me. Let me shut down...